I clicked. Oh, we're live. Hi, Keith. Thank you so much for coming on to Venture with Grace. Welcome.
Thanks so much, Grace. Really glad to be here. Appreciate you
Okay.
having me.
To start the show, I would love for the audience to get to know you a little bit more. So you grew up in Arizona, and then you have worked at like multiple different places like BCG, Bessemer, and now you're a partner at Pear. Why don't we start with like what are some core lessons that you've learned early on in your career that translate into like um, basically like useful knowledge today as a partner at Pear?
Sure. Happy to. Yes, you're right. I grew up in Arizona, and one of my first jobs was selling raffle tickets for a charity raffle at Diamondbacks games. So this was when I was a teenager in the summer, would go work at Arizona Diamondbacks baseball games and go up and down each row selling 50-50 charity raffle tickets. One of the fun lessons from that is you can approach just about anybody with an offer to sell something if you think that what you're selling them could be of massive value, and you just have to have confidence in this thing could be of massive value. So I would go to the nicest sections in the stadium, and I would just kind of start talking about like the size of last night's jackpot, right? And I would get people excited about the potential jackpot that they could win. You go to some of the other sections like the bleachers in the stadium, and you just say, oh, all it takes is $1. Like all it takes is $1. So you have to kind of adjust the value proposition and adjust the cost of entry proposition to folks you're selling to. That was a lot of fun. Something that I got to work on when I was really, really young. But more professionally speaking, I think, my first real job was as a consultant at BCG, and the entire consulting industry is a fascinating study because it just takes effectively know nothing 20-year-olds. I was 20 when I started working there as an intern, and puts them in situations where you're rubbing shoulders and talking to and learning from, and in some ways like dispensing findings and your insights to senior executives. And that sounds crazy to like the average observer. Honestly, it sounded crazy to my parents when I started explaining to them what I was going to be doing. But I think the main lesson there is that if you work hard enough at anything, if you work hard enough to produce a set of facts or analysis that nobody else has come up with at that point, someone will listen to you, right? And if they're a good leader, they'll listen to you. And if, in fact, you're working on something that is the problem that is most top of mind for them at that point in time, they're really inclined to listen to you. And so you have an opportunity to earn an audience over and above what perhaps your station in life might otherwise suggest that you should be able to attain. And so I've carried that forward. I've focused on trying to. There's a guy who ran DreamWorks Animation for a long time called Jeffrey Katzenberg, who I got to interview not long ago, and he said his whole mantra in life has been trying to exceed expectations. And I feel like without his using such an economy of words, that's what I tried to learn early on. You have an opportunity to exceed expectations for every client, for every team that you work with, and you're constantly being given a new set of expectations. And so these opportunities arise pretty frequently in the consulting world. I've tried to carry that forward now into venture, when I have probably 4 or 5 times as many meetings a day as I did in any other job I've ever had, right? And so each meeting is an opportunity to exceed expectations. That means paying attention to founders. That means understanding that what they're working on at that point in time, their fundraise, is probably the most important thing they have going on to their business, right? It won't be always the most important thing, but they need to close the round and wrap it up, and you want to give them the respect that they deserve. And unfortunately, sometimes the expectations are sort of low because founders have had terrible experiences in conversation with venture investors. But you try to really, really clear that bar by as wide a margin as you possibly can. There are all sorts of other observations and insights from different industries that I worked in as a consultant. I think the main thing that I took away is that even the largest companies, there's kind of this stratification of people who care about the company's success. And so I always found that I was most attracted to the people who feel really invested in the enterprise's success as a whole. And that's, to me, why I'm attracted to working very closely with founders, right? They care about the direction of the entire organization, not just their own career. And, on a good day, some of those incentives are lined up, but they're motivated by the entire organization succeeding. And you can find who those people are and work closely with them and accomplish a lot more when you're a consultant. And I think that's exactly the type of persona that I'm seeking to invest in and partner with as an investor now.
Totally. I want to quickly say hi to the audience. Hi, Matt. So he was like saying hi earlier. But anyway, so I wanted to learn more about like, since so I feel like Pear as a fund has grew really fast, and then like you grew at Pear from like principal to partner in like a short few years, and I wonder like what would you say were like during these like 4 years at Pear, like what would you say would be like the things that you've seen early on that you've like maybe you like invested in or like you missed, but like nowadays like you probably wouldn't do the same? I guess like what would be like the things that you've learned? Because I feel like at the very beginning when I first like entering the venture scene, I feel like everything is investable, everything is amazing, but and then it was like a drop, like everything is terrifying because and then there nowadays like I feel like there's things that like at the beginning I wouldn't even look a second look, but like nowadays like a lot of things have been changing, so like it shifts like my perspective. I wonder what was your journey like as an investor, and also like maybe we could touch up a little bit on like how Pair grow as a venture fund, since I feel like you guys have like grew very quickly,
Yeah.
become like a really great brand. What were things that you feel like Pair did right to like kind of be on the mind share of like the top founders?
Cool. Well, first of all, I owe a massive debt of gratitude to a mentor, Kent Bennett at Bessemer. I worked for Kent before coming to Pear, and at Bessemer, one of the things that I learned, is that there's sort of an aversion among some of the partnership there to chasing shiny things. And I think Kent is one of the chief proponents of the avoid chasing shiny things mentality. So he taught me to temper my excitement, especially amidst a kind of economic exuberant period, and to really root out founders and companies that might just be humming along behind the scenes and not have been exposed to the venture world before. Bessemer's a little bit later stage of an investor, kind of on the whole, than Pear is. So this approach doesn't always carry over to pre-seed and seed investing. But one of the things that I particularly enjoyed is hearing about and kind of tracking all of the ways that Bessemer was able to discover companies, SaaS companies, particularly during kind of the heyday of vertical SaaS in the mid to late 2010s. Find companies that had been built a couple of years prior and were doing quite well, and sort of just like getting to a point where with the right shepherding, with the right capital, with the right go-to-market kind of refinement, they could really break out. And so, I take that approach to founders, right? And founders and ideas, not necessarily like companies that have been in market for a period of time, but founders that have been thinking about things for a really long time. So, not somebody who decided to leave DeepMind yesterday because everybody else in their peer set was leaving DeepMind and decided to start a company, right? But really somebody who's had an itch in the back of their head around a particular idea, a particular problem space, and turning it over and over and over again. And it's like kind of just built up to the point where there is this mountain of knowledge that is ready to be brought into the light. And with the kind of the right support that can constitute a really compelling early stage company. So that's been one of the approaches that I was fortunate to be able to bring in to Pear, just by virtue of getting to work with folks like Kent prior. But you're right, in the early days of your venture career, everything seems investable, and every entrepreneur is the most amazing person, the most visionary person you've ever met. It's easy to be won over by the charisma of a founder who is has a really high opportunity cost, and therefore has to get extremely excited in a given day. And that energy is something that you're kind of sitting on the receiving end of, and often these are brilliant people. And I think there's sort of a crawl, walk, run mentality among the partners here at Pear, among our founding partners. And so, I think despite my enthusiasm for some initial investment opportunities in my first couple of months of Pear, you kind of are told to pump the brakes a little bit, and then you have an opportunity to put your full investment recommendation behind an opportunity. I think I joined Pear because I would receive that sort of support and guidance, and the direct hands-on mentorship of Pejman and Mar, who are like two of venture's greats and great success stories, and I think will be enduring institutions in the Silicon Valley ecosystem, long after Pear. But I joined for that, and I joined because I believed in their vision, and I've never met two more ambitious people who have seen clearly the opportunity to build an early stage dedicated fund. There were 7 or 8 people here when I started getting to know Pear, and when I was given an offer to join. I think we're close to 30 now, which is not exactly hyper growth by a company scale over 4 years, but certainly hyper growth by a venture team growth scale. And we really, made good, I think, on a lot of the vision that Pejman and Mar shared with me when I initially got to know them, and when I was considering coming here. So, it was important to me to be part of building a firm and not just going through the motions of doing the same thing that had always been done. I think Pear had the good fortune of a lot of early success, and so an established name, despite not being around for so long, but still a lot of opportunity ahead of it. And I'm happy to share more about what we've built over the past couple of years, but it's one of the greatest accomplishments, I think, of anybody on the team here, is looking back at all of the ways that we've expanded our coverage, we've expanded our support for our founders, been able to, get into more competitive investment opportunities, win and partner in a more meaningful way with higher caliber entrepreneurs. And there's still plenty of work to do. I can assure you of that.
Totally. I wonder, so like how since like I feel like Pear have built a lot of like different programs towards like students or just like people early on in their career in general. Like I wonder how do you quickly filter out like if an idea is valid? Because I think there's two part of the questions. One part is like I feel like it's really hard to like identify a student if a student founder's idea are like doable. Like obviously Pear have backed like the DoorDash founders. I'm sure I feel like they are student founders, I believe, and that's like proven to be a really big success. But there's a lot of student founders that maybe they were like lack of experiences. How do you like quickly filter out like which idea is backable and versus like which how do you kind of like shape their team after you invest in them to make sure that they have like a good dynamic about like go to market strategies or like people who are like familiar with a particular market.
Yeah, it's such an important channel for us. We spend an incredible amount of time working with high caliber founders on college campuses, on PhD programs, labs, full-time students, postdocs, recent grads. These are people who see a world of opportunity in front of them, are plotting their life, and want entrepreneurship to be part of it. And so we feel we absolutely must be there to serve them with all the resources around validating an idea, building a company. It's what we spend a really high amount of our time on. We think that we're better investors for it. We have a better ability to support our portfolio companies if we can address this audience in particular, because many of the people we meet end up working for our portfolio companies, and they end up coming back to us one day as founders. So most of the student founders or prospective founders we meet do not ultimately start a company out of college or out of their graduate school program, but they're entrepreneurially inclined and they're interested in starting a company down the road, right? So they remember the positive interactions they had with Pear. They remember the clarity with which we spoke about investable areas and the way that we helped them kind of figure out and illuminate like what is a path worth proceeding down versus what isn't. So they want to come back to us. So it's just an critically important part of our strategy. But how do we, decide to invest in the students that we do, or the recent graduates that we do? How do we validate those ideas? I don't think we do it any differently than a normal pre-seed or seed investment. And so obviously at these stages it starts with the founder. So what I'm looking for, and I think what Pear is looking for, are this is something that's hard to put down into a given profile, but when you spend time with somebody, and the core of what we do is spending time with people. So looking for someone who wants to run the world, right? Or run their world. They're defining a world of an opportunity, a market, and they're saying, this is my master plan to dominate this world. I'm going to run through walls and run the world. And I, in some ways exude sort of an imperialism around what I'm doing. And that's a turnoff to some people, but to others, when it's coupled with a really clear insight, grounded in some track record of execution, and the person is genuine, of high quality and high integrity, like that is an unbeatable combination for a founder. As far as the market goes, or founding team rather, because usually these are founding teams, but as far as the market goes, we're concerned with large markets. We believe that large companies can only exist in large markets, but we are not dogmatic about what constitutes a large market today, because the history of the venture ecosystem is folks investing in emerging markets that are about to become breakout categories. And so we're aware of the follies of over market sizing and rigorous, precise analytical market sizing math that comes up with a TAM that tells you that the market for widgets in this sector, to buyers of this size, is $3.756 billion. Like we're a little bit skeptical of that approach, but we do want to believe at the very least that the problem you are solving is such a large one for a given set of people that they're going to pay attention to you. And then that problem kind of rhymes with other problems that other people who are, or other customers who are similar to your initial set have, right? And so you can kind of build from there. Because again, back to the founder, an imperial founder who wants to sort of take over this world is going to define the edges of their empire in kind of this constantly evolving view, right? And so they'll be able to build for the next best set of customers, provided that there's enough overlap with what they've already achieved, with what they've already offered and the value they've already created. So we're very conscious of market size, but not, as I said, dogmatic about it. And then we start looking at things like, have you built something yet, and does it meet the needs of anybody, right? Is there any semblance of product market fit here? Have you tested this in any sort of live environment, right? We're looking for some spike on that front. We're maybe looking for some spike on distribution channel efficacy. Like, okay, yes, you don't have anything close to product market fit yet. You may not even have a product, but you've spent a lot of time cultivating a particular channel because you've launched a community for chief financial officers, and you have access to Fortune 500 CFOs unlike anybody else, right? We think about that, and then we start thinking about like the purity of your value proposition, right? Are you going to be able to call up a prospective customer and offer something of immediate value, or is it going to take hours and hours and hours to explicate, right? And we can talk about that a little bit later, but I think for us on the application software and B2B team there at Pear, there are only a handful of value propositions that end up making a lot of sense, to build initial products around. And some of the most pure forms of those involve just growing your business. So if you can tie whatever you're building back to growing your business, you're off to a head start compared to other companies that we may be evaluating. So those are some of the things we look for.
I have so many questions there. Like one of my questions, like interacting with a lot of like student founders, or just people early on in their career. Like one of the biggest like challenge I found, like the founders have, they're like not very experienced with like enterprise sales, and then like sometimes like the founders are, since they're also testing out their like product versus like go to market strategy. So basically like I feel like a lot of people have really great like innovation from like the technology end, but they're not really familiar with like the enterprise sales process, and then they spend a lot of time and energy into maybe like pivoting their product into something else that they already know one or two clients, maybe they're like their design partner or something, but they wouldn't be able to convert like a large amount of clients at the very beginning. How do you help them with like go to market? And then have you ever encountered like founders that are like, um since we haven't chatted about this before, you don't have to answer, like have you ever encountered like founders that are like difficult to work with, like, you know, for example, you try to help them to go to a certain direction, but like they may not take it, or like they're just like in general they have like specific mindset to focus on like superficial things. Like what are like what's your thought process on like helping a founder to grow their company, and then what's like the do's and don'ts of when it comes to like navigating the situation that are like fairly like not easy?
Good questions. So most first-time founders, you're right, have never successfully completed an enterprise sale unless they happen to be salespeople, account executives, and that's a founder profile that we love to see, but we don't see nearly enough. Um, However, we believe that all of our founders ultimately need to learn how to sell. And for the duration of any period of time that you are pre-product market fit and having some early signs of it, you need to be leading sales as a founder, as a founding team. It's the best way to know that you're building the right thing.
Mhm.
So how do we assess this? How do we support this? How do we somehow programmatically enforce founder-led sales? A couple ways. One, we have a go-to-market services team led by my partner Pepe and Anna. They are both B2B sales gurus, have built sales organizations themselves, and work as coaches for our portfolio companies. They help founders sit on their first sales calls, give them real-time feedback, review their transcripts, review customer objections, help figure out how to plot a path forward for different leads, help stand up the right sales tools and reporting and metrics and all that. Right? That's kind of the nuts and bolts of it. But how do we find companies and find founders and orient them around founder-led sales from day one, even as we're getting to know them? Well, it starts with the fact that many of our investments originate from long-term relationships, and it's somebody who wants to start a business, like I said earlier, has some insight about a space, is sort of
Mhm.
aggregating like facts and observations and just storing them somewhere in their mental model of how their industry or world works, and then like inching closer, ever closer to some insight about, okay, we're going to build this and it's going to radically shift how this industry operates, right? But they're
Mhm.
still in that fact gathering phase. Well, we just encourage, and again programmatically try to support as much as possible, having as many conversations with your prospective customer during that period of time. So the stage of customer discovery for us is a really important one, and in many cases we can't recommend our founders spend enough time there. Ultimately you have to move on, but I think there are all types of perspectives on the magic number of how many validation sessions and design partner sessions and customer discovery calls you should have. It's over 100, for some of our most successful companies, before they have crystallized an idea, before they have started building anything. And well, as a venture firm, what can we do to support? Well, we can make those introductions, right? We can sort of grease the tracks a little bit to help our companies have valuable conversations. And so one of the things that our go-to-market services team has done is built up a roster of folks who are leaders at large organizations, of people in industries as arcane as you can possibly imagine. We have companies that are launching weather balloons, and we know meteorologists for them to go talk to, right?
Mhm.
But we want to be able to line these conversations up and give our founders an opportunity to speak with somebody trusted, so that they can start the sales process long before they have even built a product. And I think that's the key to orienting our founders around founder-led sales, is getting them comfortable about talking about what they're doing and finding out what their prospective customer needs long before they have really, really deeply formed opinions about what they're going to build to address those needs. So you asked then, what happens when somebody is rigid in their ways, right? And is single-minded in pursuit of a particular path? We try to screen for that, right? And we
I think
appreciate,
also I
yeah,
think it's not necessarily just about like being wretched. It's more of like in general, like I feel like a lot of the founders may um for example, if they request you to do something for them, or like if they're chasing like a superficial like metrics, because I feel like
yeah,
a lot of founder feel the urge of like creating hype to fundraise immediately like after a first round of fundraise. So like I wonder, like, or like focusing on like the metrics that are not necessarily like useful for your actual growth. Since like you talk about like being at BCG, like you would like use a lot of statistics to convince like these high level like leaders and stuff. Like I wonder what would be the things that you would demonstrate to founders to make sure they're like chasing the right thing. Because nowadays, like, a lot of founder want to be called like Twitter famous, or like
yeah,
they're chasing like, let's say like some um for example, like they would want to achieve a certain, I don't know, like in general, like people are chasing like things that are like not necessarily be like the customer, or like trying to figure out your product. I feel like essentially those are the right things to do. But nowadays, because of like we have these like mega wave from like trends to trends, like from crypto to AI, like
yeah.
many big trends are happening. How do you make sure that they're like actually building the product and then creating value instead of just going after these like fancier things?
Yeah. Uh, As I was saying, I think we try to screen for that. So, I don't think we are investing in somebody because they're already Twitter famous or on the cusp of becoming Twitter famous, right? That's not a valuable sourcing channel for us. And the worst days of this job are the days that you spend the most amount of time scrolling on Twitter. So I think every one of us has moments where we see somebody who's building something flashy in our sector, and we start kind of tracking them on Twitter. We start tracking the conversation around them on Twitter, and then it takes another partner to be like, hey, snap out of that. Who cares? Like that is not. There's no correlation to building something of enduring customer value, right? Like, or if there is, it hasn't been proven yet. Or causation. So like, why don't we kind of take a step back, and we do that with some frequency, to just try to focus on building an authentic relationship with somebody who has a real insight. So yeah, we try to screen for it and avoid those investments. But yes, it's alluring. It's like you raise a couple $1 million seed fund from Pear. You want to become Twitter famous. You want to go get credit for that. So our marketing partner isn't out there recommending that you go post about this immediately. And in fact, we've decided as a firm that like a fundraising itself is not a milestone, right? I know a company that I've been working with for a number of years now that we've backed at pre-seed and seed and now Series A, and we didn't think it was worthwhile for them to share anything about what they've been doing or building until they had estimable revenue, but also just like logos and real customer success stories, and working closely with a couple of top Fortune 15 companies that they can go stand on, rather than just saying, hey, we've raised tens of millions of dollars from such and such firm. So I think we try to drill that into our companies, and you'll notice that Pear's partnership is not particularly inclined to share and spread hot takes several times a day on Twitter. So perhaps we attract founders that think similarly, maybe, or maybe we're just too busy to spend time doing the hot takes. But that's kind of one motion, is just this original screening. Now, again, the allure of Twitter is real. The allure of like being part of the hype movement is real. I think there are just examples that we can point to in our own portfolio where we say, follow this track, and you won't lose sight of the ultimate goal. And the ultimate goal is to build something that matters, that solves a real problem for people who are willing to share in the value that you're creating for them, right? Or allow you to share in the value that you're creating for them. So we seek to define that pretty early, like, what are you building? Why? If you're successful, what will success look like? Is it going to look like, everybody in the organization using this tool? Is it going to look like all spend on, I don't know, vendors running through this tool? Is it going to look like, hey, at the company, like offsite, like somebody gets up and does an all hands training for how to use this? Like, we're going to figure out like the right formula or the right indicator of radical love for your product for each thing that we work with. But once we kind of define that, or once we define what it might look like if it's a founder that we're excited to partner with, usually like they're pretty quick to orient themselves and their entire business around that pursuit. We I think most of the time just have to counsel them to not pay too much attention to the hype, right? And so the support that we offer is less about like stepping them or getting them away from trying to go invest too much time in creating hype. It's more about like assuring them that, okay, don't worry about, your competitor posted, like, I go on Twitter and I'll see some company will say like, this is what we do. And then like raised however many tens or hundreds of millions of dollars from this VC, this VC, this. And like, if that's your headline on Twitter, if that's what you are putting out into the universe, you are not focused on customers. You are not focused on trying to tell your story in an authentic way. And you're not probably going to be an enduring company that creates real value for the people you're building for. So I think we're usually more in the counseling and support business and saying, don't worry about that, giving them the license that, that we as investors aren't after these superficial metrics. Now, there are periods of time where you want a company to launch a product, right? You want them to reach their audience in a really targeted and splashy way. And there are pretty well-worn paths for doing so and playbooks for doing so. And you add your own flavor every time. But, when it comes time, when you have something of consequence and substance to share with the world, yeah, like by all means, we want to land you an exclusive in, reputable publication. Like our marketing partner is going to help you with that. We want to have you, go on great shows and podcasts like this one. We want to have you out there and telling your story, but that's not something that needs to be powering the reason for being day in, day out of your company. And I think you're right and wise to point out that it seems to be the case for founders, a decent number of founders in any given hype wave at any point in time.
Totally. I wonder, okay, so since like we chat a lot about like giving advice to founders, and I wonder, like I would love to like maybe shift the gears a little bit into like the interesting sectors. Previously we chatted about like the property tax sector. There were
Yeah.
a lot of changes in the industry from like like the agent side of things, like in the past, like people were in the past like buyer and sell, like basically the sellers, I believe sellers pay for like the buyers and agency fee. Now it's like just seller pay seller, buyer pay buyer, and then there's just like a lot of like regulations, there's fines, there are like so many changes in the real estate industry. What do you think would be like the feel like opportunities that you feel like are exciting in the space that are coming up?
Yeah. Prop tech is the worst name for a sector that I can imagine. I really hate these portmanteaus of words that are like fintech and prop tech and tech. So if you can come up with a better moniker for investments or companies that help the real estate sector, help people buy and sell homes, help people buy and sell any type of property, help people develop property, please let me know. I think this industry, this sector of venture suffers from just a horrible name. So let's work on that. It also, unfortunately, suffers from, I think, a long period of disappointing outcomes. And, I think just businesses that fell short of their potential, subscale, lower margin than expected, and no real, enduring outcomes, or few real enduring outcomes. So, and it's also something I think that that is a broader affliction of anything related to kind of the personal financial world. So back to another tech portmanteau word, but like fintech and consumer fintech obviously has just been a little bit underwhelming of of a sector for the past decade in terms of minting businesses that have really changed and shaped the way that we relate to the financial system. I think there are like a unfortunately low number of businesses that have like really changed the way that we relate to the real estate ecosystem, both as consumers, as businesses, and kind of the commercial side as potential investors. So what do we need to see? What are the opportunities today? Do they look any different than they did a decade ago? Like, why should we care? I mean, here's one massive multi-trillion-dollar reason why you should care is that it's the largest asset class in the world, in the U.S. and it's the most important the most important purchase for most Americans that they'll ever make in their lives. It's the single greatest, I guess, like impact that we have on our daily lives is like the built environment around us, right? You don't think about it, but it's true. Like the place you live, the infrastructure around you just shapes everything about a local economy. It changes the propensity to start companies. It changes the way that folks think about investing in their community. So like it really matters, this sector, and unfortunately most of it runs on businesses that were built in some cases the 80s, 90s, early 2000s. Everything from how you create, how you get something off the ground for construction to how you operate an asset on an ongoing basis. It's rife with bureaucracy and market failure. So like, why should you care? It's a huge market that isn't functioning properly. Where are the specific opportunities? I think home supply, residential home supply in particular markets is really stunted. It's obviously the result of short-sighted regulation in many cases. And so, whereas startups' role in dispensing with like poor regulation, that's harder to pin down. But at the very least, like there are opportunities to, clarify, elucidate, like what regulation allows, make it easier to challenge onerous regulation. There are businesses that are bringing intelligence to this sector in unprecedented ways that I deeply admire, and I think it'll take some time before they work their way through the development and construction ecosystem, and are adopted at scale. But I think for the first time now, developers, anyone considering investing in a piece of property to improve it can have a much more clear sense about what can and can't be built, and then have a much stronger basis for challenging restrictions on that property, right? And a much more clear way to appeal. And then there's sort of this effect of, once it gets out in the world, the kind of crazy regulations that prevent people from living in communities that reflect what they actually want to be built there. Like once that gets out, I think there are all types of tailwinds around. Like these campaigns can pick up a lot of steam, and pick up a lot of steam in local communities and in consumer apps and things. And so I think there's sort of this dormant and coming to the surface opportunity to, in a faster way, just like shape regulation and shape the art of the possible around what is built in a given area. So that's like one category of opportunities, right? It's just like creating new inventory, making it easier to get things off the ground. The next is like once something is built, servicing it, right? These are like expensive assets that require tons of coordination to maintain their value, to kind of prepare for future sale, right? Around any future transaction. And there's like decent turnover across commercial, industrial, office, retail, residential. Like these are industries that have underlying asset turnover, at a trillions of dollar level, right, every year, right? So like there's kind of this massive active market beyond just a massive passive market of like stored value, right? So there's this massive active market. So just like simplifying transactions, I think you called out the the NAR ruling and just like the way that commission structure is going to change. I think it's not overnight, but what's going to likely happen is an unbundling of services around like buying and selling a property. So we'll see probably some point solutions that are built for different elements of discovery and transaction. I'm not sure any of those in and of themselves like are set to be big businesses, but it it's possible that, someone will then rebundle them into like a better brokerage, or, a kind of a better agent experience, right? And so we'll see something that looks like, return of tech-enabled services for consumers that operate at a higher margin because of automation capabilities behind the scene. Like that's entirely a possibility, but I don't think the kind of emergent point solutions are necessarily going to win. And I think the last piece is just like, I don't know yet what technological marvels await us, but historically, you can only build as fast as it takes human labor to construct something, right? And I think we're looking at all types of advanced manufacturing capabilities, job site robotics, like off-site prefab, component panelized manufacturing for different buildings. Like these aren't always seen as investable venture spaces, but the companies that you can build around those technologies, the development businesses, the investment opportunity, the like kind of consumer grade investment opportunities, right? The the types of services that support like a more modern, I don't know, office sector, right? The more flexible working space. Like I think there's just going to be an opportunity to build faster, independent of the permitting and zoning questions earlier. There's just an opportunity to complete construction faster. This is not something that is happening immediately, but it's something that we want to pay a lot of attention to at Pear, because the founders that are studying this space now are the ones who are going to be able to build when they can really start collecting value in it in the next couple of years. So we want to get to know them. We want to get to meet them, even if it doesn't mean we're necessarily investing at this point in time.
Totally. I wonder, can we dive into like any of the specific companies in the different like spaces that you have talked about? For example, like let's call it like back office automation for real estate operators, or like expanding like access to like home ownership, or
Yeah.
making it just like easier to build and like construction related things. Um, can we maybe like tap into like one of the company that you've seen in the space?
Yeah.
We don't have to name names, but like one of the companies
I
in
know
the space that.
the curse sometimes of being a pre-seed and seed investor is that you are really excited about something, so excited, in fact, that you have invested millions of dollars of the firm's money into opportunities in the sector, and then back to what we said earlier, like there's no imminent need to jump on a hype train for it, right? You want to build quietly. If you've come across this insight, like why share it broadly with the universe? So this happens to be the case for a couple companies in the real estate sector. There are a few that I'm involved with across some of these different themes, but one in particular that hits near and dear to my heart, and I think to a lot of peers in markets like the Bay Area, and other places where home prices are record level of cost, and inventory is as low as it's ever been. Working with a company that is reimagining what it looks like to transition from renting to ownership. I can't say a ton more. I can at least promise you that it is not a rent to own model. But it's a business that is focused on creating a new type of supply in the residential single family home ownership world, and has had some pretty exciting early traction and success in doing so. And I think if they are successful, it's because they will continue to create this type of unique supply and a unique financial structure. And that's, the financial structure is their innovation. The supply that they create is by like talking to, owners of this supply and explaining the financial structure that they've created and how it creates more value for them in the long run, right? So if they can do this, I think it will change the way that a lot of folks in very, very expensive markets like get access to their first owned home. It's an exciting space, and I think it's one that I'd love your audience to stay close to Pear about as we're able to share more. I'm sure many in your audience are stuck in places like the Bay Area, renting into expensive homes, and browsing Zillow and are appalled at the cost of a 1,150 square foot single family home, right? And they're wondering what their path forward is going to be. And so I think the optimist in me and believer in one of the the most force of nature founders that I've met a long while is that there are changes coming. They don't happen overnight, but I believe very strongly in one of the businesses that we've recently backed. On the automation front, similarly working with a few others behind the scenes. But I think there are great changes underway in what it takes to service, a real estate investment asset, and this looks everything from the financial pieces of administering a lease to dispatching maintenance people to take care of a property. There's a company in the Pear portfolio called Honey Homes, on the home services side, that I think illustrates this really nicely around what it means to have a handyman, have a home maintenance subscription, but they've built their entire company around automating most of the workflows behind the scenes, and I think have been able to offer a pretty unique product. So that's one that local Bay Area and Texas homeowners can check out if they're interested in seeing what it looks like to receive best in class service in the real estate space.
I wonder, so like for example, let's say like let's use like let's use like any of these as an example. I wonder, since like making, especially leading a seed stage investment, I think there's just so much ambiguity as the product may change, or like the founder's like direction of the company may change. Like what would give you like conviction to invest um between like 500K to 5 million into a company, and like in terms of like um I guess like what would be like on your checklist to like get confidence about a certain company, like in terms of like maybe reference calls, or like um either like founder's reference call or like the client's side of reference call. Like for example, for we don't have to use Honey Home as an example, but you just mentioned about it. So like maybe like I wonder, like for a company like this to happen, like what kind of like things would they have to achieve at the stage that you invest in them at like Pear versus like what it looks like today? Obviously it looks like they have like a really good pricing,
Yeah.
and then there's a lot of like people onboarded onto the platform. Like I guess like when you invest in them as like a seed, pre-seed level, like what would you have to see to put money in?
Yeah. So at pre-seed, you're typically only evaluating the founding team and the quality of their idea. We're looking for clarity of their insight. Are they able to paint a picture of a massive business, and then reason back to where they are now, and kind of lay out that master plan that I talked about earlier? It's a really concrete exercise, right? It's it's somebody who attracts you with their ambition, but then you can sit down over the course of a 1 or 2 hour conversation and have a very frank review of all the things that you're going to need to do
Oh, I
to
also
get
want to,
yeah.
sorry to like block you from like thinking. I also want to ask before I forgot, which is like, what would be a question you ask every founder to evaluate these things?
Cool. I will touch on that.
Okay.
So anyway, so we're spending a lot of time just understanding the master plan. And then I think back to this question of market insight. I talked a little bit earlier about value proposition. Let's take a B2B company, for example. We've been talking some about prop tech, which real estate, which puts you sometimes in the consumer sector. And I want to make it clear, like I am first and foremost an application software B2B investor, care a lot about the real estate sector because it powers a huge part of the economy. And in fact, a lot of businesses behind it. So it's a major B2B area. But let's take like a prototypical B2B software founder and try to figure out, is this idea worth us getting excited about? Assuming they pass the team test, you find somebody who's imperial in all the positive ways, and you want to work with them. But is the idea worth backing? Yeah, I mean, I think the purity of value proposition around growing a business is something that we care a lot about. So we take the nugget of the idea that the founder has shared, and then try to go talk to companies that resemble the ideal customer profile that they've given us, and we suggest, if this were in your tool chest or at your disposal to help grow your business, do you think it would? Two, what is the order of magnitude of impact that it would have? Is this something that would create value for you? And then we try to assess and compare it to what the founder has told us. And if we start hearing radically different things, then it raises questions. Doesn't mean that we disbelieve them or we think that they're lying to us. It just means we want to try to retrace their research in some way, and often we do that together. And for the caliber of founder that I'm assuming we're talking about here, this is often like a mutual exercise. Sometimes, frankly, it even is happening once they're already portfolio companies of ours because the first idea didn't work out, and so we're going through this exercise once more. What do we ask every founder? We always want to know why. Why are you building this business? Why is this the thing that you are capable of and already care most about in the world, over and above or beyond anything related to your personal life? This is going to be the defining endeavor of your next decade, perhaps more if you're successful. So why? Why are you doing this? And what have you said no to along the way? These are things that I care about, that I think Pear cares about, because we want to be able to remind our founders of the reason that they're building in times when things aren't going so well. And believe me, things will not go well for a lot of founders at points in time. And so we just want to be able to return them to their original vision. We want to become as big of believers in that vision as they are. That's very important to us, is coming to a shared vision and ambition. And I think once you have that mutual understanding, sometimes when the enthusiasm is flagging on the founder side because it's intensely personal, intensely emotional, we can be there to retrace some of the conversations that we've had previously and sort of bring back the perspective of the person who pitched us originally. So I think that matters a lot. You want people who are doing this for the right reason.
I wonder, so maybe we could jump into some of the companies that you have already invested in that are doing great. So let's use maybe Pearl Street as an example. How do you quickly understand the energy slash climate sector? Well, I classify them in the climate or energy space, but maybe you could adjust me if I'm wrong. How do you
Yeah.
quickly understand the space, and then how does the money flow in the space? When you're looking at a portfolio company like this, how do you, how many companies do you have to chat with in the particular sector to make sure that you are you understand the problem sufficiently?
Yeah, it's a good question. Pearl Street is a favorite business of mine to talk about because they exist in an industry that is presently prone to intense hype and exuberance, right? As you said, the climate sector, but they squarely do not think of themselves as a climate business. They think of themselves as an energy company or an energy software company. They were around before, or perhaps just before, climate was a cool sector to invest in. And they take pride in the fact that they did not get into this to soak up venture funding and dollars that were designated and earmarked for climate strategies, right? They got into this because they saw a real market need. They had some incredibly foundational research from a leading Carnegie Mellon lab, and deep industry experience from working at another of our portfolio companies in the sector, Aurora Solar. So the genesis of this company is as pure as we can imagine when you're thinking about something that is immune, hopefully, to the hype of a given moment.
Mm-hmm.
And what do? Well, there's this incredibly difficult problem in the U.S. energy market right now, the renewable energy market, which is there's a terawatt of solar and renewable power waiting, projects that have been proposed that are waiting to be connected to the grid, right? And because of fragmentation in how energy markets and grids are administered, there are backlogs of varying lengths in different geographic regions. But on the whole, it's not a good story. And it means that cheap and reliable power that we could bring to the grid is stunted and prevented from having access until it completes fairly lengthy interconnection studies that are run by these things called called RTOs or ISOs, right, that administer the grid. So what does Pearl Street do? Well, it automates a lot of the study that these organizations would heretofore run, right? That consultants would get paid lots of money that would take months and months to do. They can do it in, hours, right? And so the idea is that Pearl Street sells to these organizations, also sells to developers so that they can better prepare their applications as they get submitted to the interconnection queue. We think this is an awesome business because the tailwinds are second to none. I think in the, you look at the cost curve of solar cells coming down, you look at the, just the cost curves of batteries, right? The ability to store some of the energy that solar generates. Like, we don't think that this is a faddish business. We think that that this is here for the long run. Now, there are plenty of business models that are purely faddish or superficial as they're related to the solar renewable industry. But this is core operational software that is going to power both the interconnection process and the development process for, hopefully decades to come. They, are led by founders who I think are just as happy spending all afternoon talking to, a 40-year veteran of, the local, Southwest Power Pool kind of grid organization, right, as they are talking to a VC. In fact, I think they'd rather be doing that than talking to a VC. And so, I think on a lot of dimensions, this is a business that has unlocked something close to the value proposition that I talked about, which is, they help solar businesses grow. It's not a sales tool necessarily, right? It's not like a lead generation tool. And when I say the value proposition of helping you grow your business is the most pure form, I'm not only talking about things that help you like generate top of funnel B2B software leads, but like Pearl Street is the obvious case of like unlocking a very, very like frustrating bottleneck in this market that if they do it right means that solar businesses will grow considerably, that the organizations that oversee local grids will be able to much more intelligently authorize new interconnection, right? And they'll create this like wonderful effect where the cost of proposing ever cheaper and more reliable solar power continues to drop. We're really excited about them, and I think it's a good example of ways that you can think creatively around the value proposition of growing your business.
I want to, since like we're about to hit the time, I want to maybe do you think we can have like, call it like 3 more minutes to talk about Symbol before? Okay. So,
sure.
Okay, I want to like, since we only, so I feel like Symbol is in such a different market than the solar energy market. Like, I thought this was a really cool company because it just helps people to do marketing easier for events and tickets for like concerts and stuff. How did you discover the company, and can you quickly walk us through your thought process on like this space? Because I feel like this is such a popular space to create companies in, and then how do you discover the company to
So Symbol's a marketing automation platform that helps live event venues sell more tickets.
I would want this for people attending podcasts or something. Just like
you're welcome to become a customer. Please do. The sort of hack here was I went to college with the founder, so personal network, but kept in touch and actually got to invite them to a Pear event and kind of kept in touch around that. The original idea for Symbol looked a little bit like what they're building now, but was focused on taking advantage, as it were, of blockchain technology. And by the way, like still like a product that they can and would happily offer, but it's not something that we see as much demand for. Basically, they built a business that made it easier to create an encrypted ticket, right? They weren't selling like NFTs. They were not a crypto company, but it was a technology that they were seeing some demand for from rights holders of live events, right? So, do your customer research, ask what they're interested in. They built this, but then they realized look, it's not just a safer, more secure, easier to track ticket that that live events venues want, that rights holders want. Actually, what they want is a way to sell more of those tickets, right? So back to this point of what's the like most authentic and pure like value proposition you can provide that's going to get you in the hands of as many loving, adoring customers as possible. Something that helps you sell more tickets. That's the real problem, right? The real problem there are two real problems in the live events industry. One is that most ticketing providers have the lowest NPS of any consumer service that we regularly interact with. We've seen this time and again, from Ticketmaster's challenges administering the Taylor Swift on sale about a year and a half ago to, recent DOJ to recent enforcement action against, like the kind of trust and conglomerate of some of these businesses. But I think the other core insight here is that if you're going through all the effort of putting on a live show, you better make sure that that show is sold out, right? If you don't, that is just completely wasted inventory. You never get an opportunity to sell it again. Most of the businesses that power the live events economy are actually like fairly small to medium-sized businesses. They're not sophisticated in their marketing stack in any way. And if they even wanted to implement tools like SMS automation or marketing automation, they would be stuck using really generic horizontal tools to offer live on sales or targeted outbound to customers of a given genre or fans of a given genre. There's nothing built for the industry that integrates deeply with ticketing providers, that integrates deeply with the CRM of a given venue, or offers a CRM for free in the case of Symbol. So they've come in, they've built a product that has I'll tell you a secret, like one of the highest demo to close rates of any software company that I've ever seen. I think this is a fact that, or I think a good proof point of if you build a beautiful product for a given vertical, your customers are going to appreciate you, and your value proposition is going to resonate really deeply and clearly early on. So Symbol is I think, illustrating that the live events industry doesn't have to be stuck in an era of like get sent a PDF ticket that gets transferred to you from some shady secondary marketplace, and then you show up to the venue and nobody has a record of who you are, and perhaps somebody else walked in ahead of you. So they integrate with best in class existing ticketing providers to distribute inventory on a host of different platforms and to help venues to target the best possible buyer for any given show, and do so in a way where it makes creating campaigns take about 3 to 4% of the time as it would have using any other set of tools, much less any kind of generic manual process that you could have imagined. So we're very excited for them. I think the live events industry, for a lot of reasons, is one of the most kind of exciting parts of the consumer economy, and will be for a long time, which means that selling tools to businesses that are one step removed from the consumer economy, in this particular case, is a good place to be. And like I said earlier, I'm not a consumer investor, but I love to work with companies that are dealing with consumer-facing businesses that are solving problems that historically would get passed on to consumers, right? So if you fix a venue's ability to market to their customers, it actually means that fans of a given band are going to be more likely to see that band, right? Or fans of a given genre of music are going to be more able to discover live shows around them. So we're really excited for Symbol. I hope that you'll get to see, a show that they're a show put on by one of the venues that they're working with at some point. They also, work with other live events providers. So, if you want to use them for a summit related to your podcast community, or, a kind of a live version of something you're doing someday, I'm sure they would love to chat with you.
Amazing. Well, Keith, we're at the last part of the interview. I have a quick 30-second fire round for you.
All right.
Okay. What's your favorite book?
Favorite book? I think East of Eden by John Steinbeck.
Who made the biggest impact in your career?
Up to this point, I think it's been a teacher that I had in high school, actually my sophomore English teacher.
Oh, wow. What did they do?
They they told me that it's okay to spend a lot of time writing and thinking, and gave me license to research and explore and kind of inhabit a state of mind that maybe isn't first nature to or second nature to a lot of high school boys.
Who would you invite to your dinner party?
You're welcome to come to my dinner party.
Oh,
Would love
thank you.
would love to include you in my dinner party. Beyond that, I'm reading this book right now that it tells the story of Neiman Marcus, which is a
Oh
story
wow.
that I'll go on the record and say I
What
don't
is
really shop
this?
at
What
Neiman
is the book?
Marcus,
Yeah.
but it was published in 1972, and it tells the story of the early years of Neiman Marcus, like going back to the 20th century. So it was written by Stanley Marcus, who is the son of the founder of Neiman Marcus, but it was like this family business where his dad and uncle and aunt and brothers were all in it. And anyway, so just they seem like the most entertaining, eclectic bunch. I'd love to go back to the early days of kind of this revolution in retail and commerce, and better understand like some of the savviest operators of that era, and learn a little bit more about how they might view like the developments over the past century. So it's a gem of book. It's probably completely out of print. I only found it because it was on the bookshelf of a place I was vacationing in a couple of weeks ago, and it was this old dusty thing. So it's called Minding the Store, and so far it's a fun one. So I think they're top
Oh
of
wow.
mind for me.
Oh, I'm totally gonna check it out. I love these
Yeah,
kind of things. I would also recommend you like the Donna Karen book. I don't know. It was like the first book I probably like listened to who was like a actually brand builder. Like I really understand like how it kind of like goes to
really.
like build a successful business. Well, maybe I don't know, like it is just on top of my mind.
Yeah.
So I feel like, yeah, anyway, you mentioned about Neiman Marcus.
Yeah, I mean, look, anyone who's built a brand in the fashion or retail space, I think they have to be masters of consumer, right? That's obvious, but at the end of the day, I think they are generally some of the savviest negotiators and B2B operators, procurement
Yeah, 100%. Yeah.
operators you can imagine, right? So like these are people who know a lot about the operations, not just like building a brand and reaching consumers.
Wow, totally. Also, hi Jordan. So he said Neiman Marcus story was great. Can't believe it started in Neiman Marcus in
Yes,
17.
yes,
Amazing.
that
So,
is a little known fact. It is crazy. They so Carrie Neiman and Al Marcus and the others, they actually started a business, and then this was like outside of Atlanta. They had an opportunity to sell that business either for cash or for the distribution rights in a couple of states for this nascent brand called Coca-Cola. And they like took the cash, right, and then went and plowed that back into starting a retail store in Dallas. But yeah, you could run the numbers and figure out what they would have been worth if they had just like taken on the opportunity to build this Coke empire.
amazing. Okay, in the last question, where can we find you outside of work? Where can we find you outside of work? Sorry.
Yeah, I live down in Palo Alto, so pretty frequently outside around here. I think one of the greatest perks of being a California taxpayer is access to all of the outdoor space, and so I'm usually in some of the mountains nearby, the hills nearby on weekends, doing one thing or another.
Amazing. Well, Keith, thank you so much for coming on the show today. It was a fun conversation.
Yeah, really appreciate it, Grace. Always happy to have you to a dinner party, and thanks so much for having me on. Thanks
You.
everyone for joining.
Thanks,
Take care.
everyone.